Hi traders, Dale Pinkert here at Forex Stop Hunter on Twitter. We had a real rocky Sunday evening as word went out that President Trump was ready to raise tariffs on the Chinese, so the S&Ps were 45 lower last night. A huge recovery today, although in the aftermarket, giving back a lot of that recovery. I wanted to start off with US dollar yen, but because it's very rare that you get gaps in FX because of the 24-hour nature. So usually, if you're going to get gaps, they happen Sunday evening after the markets close for a day on Saturday. I know you crypto people, you even trade Saturday, but FX is closed for a day. So we had that news, and we had a gap lower opening in US dollar yen. With the market recovery, the yen tried to eat its way back into the gap it left this morning. It's going to be very interesting to see if we could fill this gap. I still have lower numbers ahead for US dollar yen associated with yields continuing to drop. I'm looking for yields to take out the recent low in yields before we rallied back to 260. If you recall, 235 yield on the 10-year. I had a 3 drive looking for this recovery. Yields were lower. I think they could accelerate. So watching the yen, still believe all rallies could be sold. We'll see if it makes an attempt to fill the gap. If it doesn't, it's even more bearish. So we're only able to eat into it. Gap filled at the close on Friday would be, call it 111.08. So we're about 43 pips away. I still think there's potential for 109.5 and then 108.50. So those are my downside targets. Any rallies to me is a selling opportunity. Wanted to show the S&Ps. You're looking at a 4-hour chart. As you can tell, the first big red candle was last night on the trade news with China, and then we fought ourselves almost all the way back to where we closed last Friday. And in the aftermarket, you could see a pretty negative candle. I can say this, that if we take out this 2880 level, which is a 200 moving average, 200 4-hour moving average, 200 day comes in. A similar area. Let's see. I think it's a little bit underneath it. Let's see, that's going to come in at 28.5, and then the 200 days 2770. I think that's doable, 2770. So pretty negative. I thought the way we closed, there might be one more shot for new highs because that's normally what happens. But under 2880 is not going to be a good signal. It should measure 2800. Just closes back under 2900, which were last week's lows, would be pretty negative. The 2 week off number is up around 2939. So amazingly, that's something I teach. The high today was 35.5. Didn't quite get to the off number. And I want to wrap it with crude. As the market recovered, crude bottomed at the $60 level. So paying very close attention to fibs. We got to 38% back. I want to see what happens, especially if the market melts, if this is going to be enough. It was prior support at the 62.20 level. Still believe there's lower numbers to come in crude. Just don't have conviction if 38% was enough of a rally to step into. Good trading to everyone this week. Remember, don't just count your pips, count your blessings. Dale Pinkert at Forex Stop Hunter. Good hunting, everyone.